Welcome back to Bazaar Morning Call. Well, our research team is standing by with the list of top 10 stocks as we begin a brand new day of trade. So let's get straight to it. Nigel, you're watching out for ACC. How are the numbers?
Well, that's right. ACC's numbers actually were pretty much in line with what we were working with. And I'm going with green out there because on the top line, there was a bit of a beat owing to higher volumes. So the volumes came in at in excess of around 10 million tons. We were working with around 9.7 million tons. We'll have to find out further about, how much of it was solely ACC. Or was it something to do with, the deal they have with Sanghi unit or maybe the Asian Concrete unit as well? But short point is that they beat out there. EBITDA, well, that was pattern line. The EBITDA margins, though, came in a little bit lower. How do they manage this? Because realizations were rather weak, which were down by 3% sequentially. Employee cost was lower, power and fuel cost was lower, and freight and forwarding cost as well was lower. The profit number, though, that came in lower by close to 20%, higher depreciation, higher finance costs, and lower other income. Since the numbers are in line, going with green on that name.
Okay, going with green on ACC, a 9% volume growth there. But Sonal is with us to talk about HPCL and how that one looked. Sonal, over to you.
Good morning, Sonia. It was a weak set, much lower than what the poll was suggesting. Revenues came in flat at 1.14 lakh crore rupees on a quarter-on-quarter basis. EBITDA, though, halved on a quarter-on-quarter basis, leading to margins of 1.9% versus 4.2%, and profits were down 87% to come in at 356 crore rupees. The poll suggested anywhere to the tune of 1,000 to 1,200 crore rupees. It was led by the refining segment. The reported GRMs came in lower at $5 per barrel, not so much lower than what the poll was suggesting, but they did take a hit of LPG under recovery, and that is the reason there was a negative buffer of 2,440 crore rupees. The company did see the impact of Russian crude oil discounting. That's why they reported GRMs even lower than BPCL. Jefferies has an underperform with a target price of 315. JP Morgan has a neutral with a target price of 335. But Citi is very bullish on the stock. However, going with red on the weakness that we saw this quarter.
All right, Sonal, thanks very much for that. I think there was I think UBS upgraded their rating on oil marketing companies, as Nimesh was telling us yesterday. But that's a space which will continue to be active, as Sonal said. Colgate, perhaps, is also something which would stand out today with the strong earnings. Mangalam is here with details. Mangalam, morning.
Very strong earnings from Colgate this time around. It could well be the result of the season for the FMCG company. A big beat across all parameters, high single-digit volume growth in the toothpaste business, and continued pickup in rural markets for the second consecutive quarter. So if you just take a look at the numbers, revenue just shy of 1,500 crores. The street was working with a number of 1,430 crores. EBITDA above 500 crores. The street was working with a number of 470 crores. Margins at 34%. And the net profit also came in much higher, 364 crores versus expectations of 332 crores as well. And even if you look at it year on year, a 13% revenue growth, 21% EBITDA growth, and 33% net profit growth is impressive, whichever way you look at it. High single-digit volume growth in toothpaste compares to street expectations of 2 to 3%. Gross margins improved, and this despite the company not scaling back on ad spend. So ad spends increased by about 10% as well. See some green on the stock despite it having run up 70% over the last 12 months.
Okay, all right, Mangalam, thanks a lot for that. Well, let's go to Upasana, who's here to tell us about KEI Industries. Upasana?
Good morning. Well, it was a good Q1 for KEI Industries. The revenue saw an uptick of 16% on a YoY basis. Cables and wires saw good growth, while stainless steel and EPC projects lagged. Now, the main revenue growth came in from cables and wire division, where revenue was up about 17% and EBITDA margins expanded by 220 basis points at 11%. Gross margins stood at 26.3% versus 25.7% on a YoY basis, and EBITDA margins also expanded sharply from 9.9% to 10.4%. Company's pending order stands at 3,590 crores. And mind you, earlier company had given their FY25 guidance, in which revenue they had said would range between 15 to 16%, which is pretty much in line with Q1. And EBITDA margins also they had guided would range between 10.5 to 11%, which is again nearly in line with the Q1 numbers. So all in all, good set of numbers coming in from KEI Industries in its Q1 FY25.
Okay, good quarter from KEI Industries. Do note we will be connecting with the management of KEI Industries at 9:30 a.m. later today, so do stay tuned in for that. But there are plenty of other stocks to watch out for. Kalpataru Projects is one of them. Vivek is here to tell us more about that. Vivek, how did it look?
Well, good morning. Kalpataru Projects in line with its peer set, where both KEC International as well as L&T call out the fact that there was labor unavailability due to the elections. The top line growth has been quite muted, execution has been muted. Now, along with that, Kalpataru also suffered from an inferior revenue mix, and also weakness as far as one particular segment, that is the water segment, was concerned. Now, looking at the numbers, revenue is higher by 8.2%. This is lower than what the company anticipates for the full year. EBITDA to down almost 1%, margins 80 basis points lower, and profitability lower quite sharply at 20% on a year-on-year basis. The company said that the water business revenue was impacted due to lower collections and also shortage of manpower. And the company said margins were impacted on account of the project mix variation. What bodes well for the company, the order inflow as well as the order book remains quite strong. Order inflows of over 7,000 crore in FY25 so far. Order book at 57,195 crore. And the company is L1 in orders worth almost 5,000 crores. So order book is strong, but execution this quarter has been quite muted.
All right, Vivek, thank you very much for that. Well, more numbers. Upasana has got that list. Upasana, morning.
Well, first up, let me start with data patterns. The company reported a steady set of results. The revenue saw an uptick of 16% on a YoY basis. EBITDA stood at 37 crores versus 28 crores with an uptick of 34% on a YoY basis. And company reported a strong EBITDA margin of 35.7% versus 31% on a YoY basis. PAT stood at 33 crores with an uptick of 27%, which was mainly led by higher other income. The company's won orders worth 38 crore in Q1 FY25, which is lowest in last 12 quarters, taking the total order book to 1,020 crores. Next up is ideaForge. The company reported a weak set of numbers. The revenue saw a downtick of 11% on a YoY basis. Gross margins stood at 33% versus 56% on a YoY basis. And margins stood at just about 4% versus 29% on a YoY basis. PAT also saw a degrowth of 90% and stood at 2 crores. Order book stood at just about 4.2 crores versus 125 crores on a sequential basis, which is lowest in last 4 quarters. So weak order book and higher cost of materials has led to such a low growth in ideaForge Technologies.
Thanks a lot for that, Upasana. Well, I'm focusing on 2 more stocks, one in the green, one in the red. Jindal Saw, numbers look very good. Top line growth of close to around 12%. That's beautiful. But the margin picture for the third straight quarter, it's holding at around 17%. So it seems that margin band has readjusted to the late teens instead of the early teens. So that's good news as well. The profit number was up by close to around 70%. The consolidated debt, yes, it moved up on a sequential basis, but that's more to do with working capital getting stretched. The long-term debt, well, that came down, in fact, on a sequential basis. So wouldn't read too much of a negative in that. The positive as well is that the current order book continues to swell up. Now it's holding at around $1.65 billion, which is giving you visibility for the next 3 to around 4 quarters. So thumbs up on that one. Red, though, on Maharashtra Seamless, it'll have to be a thumbs down there because revenue was degrown by close to around 6%. The EBITDA took a hard knock, down more than 45%, close to around 50% actually. And margins coming in at a multi-quarter low at only around 11%. The EBITDA per ton is something that we look at, and the seamless business that normally drives the EBITDA, well, that came in at less than 10,000 rupees per ton. The ERW, well, that was more or less stable on a year-to-year basis. 2 positives, though. One is that the order book is still healthy, and they have cash of close to around 2,000 crores, which effectively is nearly 25% of the current market cap. So the stock starts off in the red, but later on, we'll connect with the management of Maharashtra Seamless later on the show at around 9:40 a.m. later today. So we'll try to understand what went wrong in the past quarter.
Okay, well, that is coming up at 9:40, so do stay tuned in for that. But PNB Housing is the other one that we're focusing on this morning. Vivek is here to give us the fine print. Vivek, how did it look?
Well, after a whole slew of earnings, one company that we need to focus on the back of a likely block deal today. We accessed the term sheet last evening and we understand that the Carlyle Group, which holds stake in PNB Housing under the name of Quality Investment Holdings, is looking to sell up to 6.4% stake via a block deal. We understand that the total size of the offer is a little over 1,250 crores. The floor price is at almost a significant discount at 755 rupees a share. There is a 90-day lock-in on further sale of shares by, and the book-running lead managers are Motilal Oswal as well as IIFL Securities. Remember, the Carlyle Group holds almost 32.68% stake in the company, so they're looking to pair around 6.4% stake in today's block deal.
Okay, thanks a lot for that. Here's a quick recap of our top stocks with positive news flow. There's ACC, Colgate, Palmolive, KEI Industries, Data Patterns, and Jindal Saw. While stocks with negative news flow, there's HPCL, Kalpataru Projects, ideaForge Tech, Maharashtra Seamless and PNB Housing Finance. Let's take a quick commercial break. On the other side of the break, Siddharth Khemka, the head of retail research at Motilal Oswal Financial Services, will be with us for some fundamental stock analysis. Stay tuned.